Hey everybody, Economic Ninja here. I hope you're doing well. Got a story out of FreightWaves. I think it's really important. This is something I talked about in November where I said, as everything was starting to get expensive and we were having shipping delays with the port of Los Angeles, San Pedro, that area. I said, wait till the spring. There's going to be really, really good deals because as they get those supply chain problems worked out, right? Even though it was going to take a long time, what would happen is our stores would become flooded with inventory. And we started to see stories where Christmas decorations were coming online really late in some stores. Some places I think gave up completely trying to sell them. But there was more than that. There was more on those ships than what met the eye. And so now we're starting to see that, and this is a story right now, but there's still a very important warning here, okay? So let's talk about it. It's entitled, "A Major Cause of Inflation May Have Peaked." That's good news for consumers, but bad news for trucking companies. It says here, note these sobering statistics. Truckload spot rates have fallen by nearly 1/3 since the start of the year, while truckload contract rates have risen. So also, I want to remind people that these rates were high compared to the past because of, let's say, a crisis. It was a supply chain crisis, all right? So they're still elevated in comparison to, longer term, like if you look back in the past, how much shipping rates were. I just want you to understand that, okay? So it's not like we're out of the woods yet. But they have fallen, and they've fallen pretty fast, pretty dramatically, actually. It's pretty amazing how fast these things can turn around once they do. Now, it said the spread between truckload spot and contract rates are near an all-time high. Trucking spot rates always lead trucking contract rates, usually by about 3 months. So we're already starting to see the future here, where this is headed. Shippers, which are firms that buy trucking capacity from trucking companies, buy most of their capacity in the truckload contract market, which means they have not seen a reduction in freight rates as of yet. So they're still dealing with the higher prices, okay? So they're still hurting. Their margins are being impacted right now. So you have to remember that too. It's not just about what's going on in the trucking, like as far as the owner operator or the brokers, what they're doing with their freight contracts. These companies that are buying ahead of time space on those trucks, they're being squeezed by other types of inflation as well. So they're having a hard time staying open in business right now, especially if you think about the labor issue. Okay, there's still labor issues where companies are having a hard time retaining or hiring good workers. So a lot of pressure still on the system. It says there are signs that truckload contract rates have peaked, gathered through a combination of survey, channel checks, and index models. We don't know how exactly, strong that is. And it says truckload contract rates could fall by 35 cents a mile. It's pretty staggering. Now, here's an interesting one. Because the cost of diesel has doubled, it will take contract rates falling more than 12.5% before shippers would see a reduction in freight costs compared to the start of the year. So again, pressure on these companies that are trying to do business. So now it talks here, and I'm going to close on this, and then we'll talk about it. Beginning in late February, results from the survey showed increasingly negative views on demand and rates. This tracks with freight market data that FreightWaves has been reporting for the past 2 months. The indicators are reported as a diffusion index, which measures whether participants believe that the indicators are going to increase or decrease, when it comes to rates, anything above 50 indicates that shippers believe rates are about to increase. Anything below 50 indicates that shippers believe rates will decrease. Said the Bank of America analyst wrote that the rate indicator, which measures shippers' views on truck rates, fell further from April's collapse, falling again to 38 from 38.8 on a percentage basis. That's huge. I mean, this is, again, remember when I told you, well, here, hold on, I'll finish this. In the last survey, it's the lowest level since May of 2020, and May of 2020 was bad. All right, now, sorry, I'm not looking at the camera, I'm looking at the start button. So May of 2020 was obviously bad, right, for the freight industry. Everything was shut down. There was nothing really moving. People were literally at home. So now think about this. I put out a video, I said deflation has begun a month ago, and I used the shipping index or the freight rates as an indicator, because that meant there was less things moving, and it was because people were buying less things that they don't need. One, because they stocked up on them while everyone was at home, right? They were buying things on Amazon and stuff. Another reason is because they simply do not have the money because inflation is squeezing them, all right? And I said, now watch for the next month, and let's see. And we just watched it fall from 38.8 to 30. I don't even remember the numbers now, but it was a dramatic plunge. And so my point being is that we have now seen 2 months of this shipping falling, 38 even from 38.8. So my point being is that on a percentage basis, these things are falling pretty darn good. I really believe that we need to start really thinking, like we're talking about recession. That's the big word in the news. And a recession is defined as 2 months of negative GDP growth, right? And so we had one big surprise where it was supposed to be a positive number and it came out as a negative number. That's a huge surprise. And people are saying, there's going to be a recession. There's the Federal Reserve coming out now. You're seeing these Fed governors coming out pretty frequently and saying everything's fine, everything's fine. Bullard came out and said there's going to be no recession. That is your indication right there. This is where we're at. They are trying to do damage control and hope for the best, but that's not going to happen. We're hitting a recession. We're in the recession right now. You're just waiting for, the world's waiting for confirmation from a bunch of guys that are running the world and deciding, how much money you should have or how much money you shouldn't have. Quite frankly, because they determine the interest rate on the money that they make, fake, and give to you. There's never been a better reason to get out of the system financially. I mean, like literally hold cash and stuff for deals, but look at inflation hedges. Right now, food's an inflation hedge. Gold is an inflation hedge. Since this whole thing started and inflation started roaring up, gold is higher than it was before this whole thing started in 2019. So you've got to look at those numbers and go, these aren't denying. Gold's doing its job. Silver is up much higher than it was. I want to say it was $15 when this whole thing started. It's now 22. Regardless if it was 28 and now it's down a little bit, that's coming down. It's, we have to look at things that are going to be inflation hedges. If you could pay ahead for a subscription service that you use or you need right now, do it. Do it before they raise the rates. If you know you're going to use it, think of it that way. You're trying to save everything you can right now. Because as this whole system comes crashing down, it sounds funny. I had a guy tell me the other day, a buddy of mine, he goes, it's not about how much you make in this, it's how much you can hold on to. As everybody's losing everything, and I'll give you an example, like crypto has lost a ton. Do I believe it's going to be much higher? Do I believe you'll see $1 million Bitcoin someday? Absolutely. Don't be small-minded and think that because it didn't happen 6 months ago, or like 6 months later, that it's not going to happen. Don't be like that. That'd be like me telling you when oil was $20 a barrel back in the 90s, that it's someday going to be 120, and you're like 6 months later, like, so it didn't happen. Don't be small-minded. Think bigger. This is how wealthy people think. They understand the destruction of the currency that's happening right now. The purchasing power is being destroyed. All right, guys, I hope you got something out of this. I thank you so much for watching. Thanks for all the thumbs up. Thanks for all the new subscribers. Thanks to all my regular subscribers. You guys are awesome. The Economic Ninja is out.